Well, good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for Wednesday. We're at the 4th of June, 2025. You know, today was the ADP report, so we got to see what that private agency does that writes checks all through America. And guess what? Only 37,000 new jobs. So what the market did is interest rates shot up on that in the futures, which means real rates fell. The dollar fell on the news because the market's getting nervous that what's finally happening is these tariffs are working their way through the market and creating even more uncertainty, and jobs aren't coming. I don't trust the ADP report generally at all. It's all over the board. It doesn't correlate real well with the Friday jobs report we're going to get. That doesn't mean it can't. The second thing that bothers me in it, we just saw the JOLTS report. There's 200,000 more new jobs being offered. So something's not jiving. If the employers were really holding off that way, why are there 200,000 more jobs hitting the market there? Something's not making sense to me at that point. So what do? I'll let you figure that one out. But for me, one report does not set a trend in the market. The other things that happened today, and we'll get to the day's data, Presidents Putin and Trump had a conversation. Putin made it a point to let Trump know that they're going after Ukraine for the damage those drones did to his aircraft. Our president apparently asked Putin if he would step in and talk to Iran because the frustration level's over the table. I don't understand why we're not attacking Iran. I don't get it. Why are you giving them every day that goes by closer to nuclear-grade weapon unless we don't know everything? What if they have the nuclear grade already and they've got something there? I don't know. I don't have the slightest idea because I don't believe U.S. propaganda or foreign propaganda out of Iran rather. So you can't believe any of that. Now, tomorrow, here's what you're going to have in data. Let me get there for you instead of that right now. Here we go. You're going to get the Challenger Group, which basically these are corporations with planned job cuts, and that's at 6:30 in the morning. You're going to get the revised non-farm productivity number at 7:30. I don't think that's a big report. Jobless claims people are going to look at hard. They're looking for about 236,000. The U.S. trade balance data, you know people always look at that for April, and they'll say how poorly we're doing and that we're not keeping our financial house in order. And by the way, the budget office today came out and said that forget the $3.6 trillion that Trump's plan will put us further into debt. It's now only $2.4 trillion. Trump had to be all smiles going, I told you guys so, I told you my plan's solid, blah, blah, blah. CBO does different things different ways. European Central Bank, in the morning at 7:15, we're going to get their monetary policy announcement. They're widely expected to drop their rate by a quarter point and even give indications that at the next meeting that's right around the corner, they'll do that. Do want to remind you that we're going to have my videos. If you don't join me early in the morning, you're really missing out on what I do. Because I'm not allowed in these videos to say, buy here, sell there, here's what you do. I'll track that trade while we put it on and take it off. I don't publish track records other than keeping up with the trade, assuming that you followed the recommendation and that price was hit, which we can easily prove. You go to iraepstein.com. Under the word research, it's all there. All I need to do is give you one idea that you probably have on your own and you needed that push. And maybe this is where, why, and how, because I explain the trades all via the charts that I make the recommendations on. So today, uranium up another 34 cents. You've left the $25 area. You're now substantially higher. And so I don't think we go much under that $25 to $20 area again. I think that you've now got your base in place. AMC, as I told you, they're going to make you watch even more commercials. So this is good. You can come a little later to the movie theater. You know they're going to have a bit longer in their commercials. They're going to have a platinum spot now that they get paid more money for. It allows me to get hot popcorn and all and not have to sit there. I can time it better. And with reserve seats, you're always in okay position. Home Depot down a little. Apple just can't hold rallies at this point. Netflix, new all-time high. I mean, that company's just on a race. GM, not surprised it's down. You know, anything in the way of steel that has to be imported, these cars now cost more money with the 25% tax. You held on in the gold, the GDX, and the copper for nice gains. Now, in talking about the materials, rare earth materials, there's your breakout. Yesterday, I said to you, let's see if I can get this to do it. I said, you have a pattern here that if you take out the high right through there, that was, let's go back, Tuesday's high. No, I'm sorry, that's Monday's high. Monday's high, because this was Tuesday, and today's Wednesday. I think the market can make its run. Why? Why did I say that? I said it here in this video. Higher lows, higher highs, that's what would have been created. So you have the swing line turning up. The market's already been over the 18-day average. The first resistance would have been 23.36, and if you clear that, where's the Bollinger Band? And it's right there, it was with it. So you've cleared both. Do I think the market's just going to pick up and run? Well, it could. It's certainly got the story of rare earths, because President Trump today came out and said very clearly, President Xi is very hard to deal with. I guess that's parlance for Trump doesn't think he's going to get anywhere with him on this rare earths. That's another way to look at it. A target would be the $30 mark if it can get there. That's about, from here, about another 20%. But, and there's big buts, you're over the Bollinger Band. You only stay over or under Bollinger Bands 5% of the time. I do think you've made a bottom in the market. I'm wrong if you took out this low that the market made on Monday. Barring that, I look for higher prices overall. But would I tell you to buy over a Bollinger Band in an overbought condition? Sign up and join me in my spider research in the morning, and you find out about these things. Eli Lilly, have I not been talking to you that I thought this market could make a run to the upper band? It's done it. You hit the first objective today. As I said, I'm thinking you've got your bottom in place in Lilly for quite a while. Now, if the whole market were to come apart, obviously things would get hurt. But on its own, I like what I'm seeing in this. Broadcom just doesn't stop. New highs, just keeps going. It's hand in hand with the embedded reading of the market until the red line closes under 79. Yeah, you'll get periods where you're over the Bollinger Band and you pull back in them. But it's just not looking backwards, which is a great news for those of you that believe in AI as I do. AI's in its infancy. This is like mobile phones when they first came out, and especially the first iPhone, because we were all carrying those bags with either had a phone or if you had it in the car, it was an old dial type. It was funny as can be. I was looking at some of them that I had in cars. I've been a car freak all my life, and I'd have phones installed. It's a whole different world today. Well, that's where you're at with this AI. Same thing. When you look at Google pulling back to the 18-day average of closes, this is where I think the market now begins its battle. Can it get its support here or not? If it can't, you have another leg down, another $10 or so that could happen. Let's see how it does. There's no buy signal that I see in the market. It's also not a sell signal. It was a correction, and this is where it went. Remember what my delineation point on a chart is? The 18-day average. When the market's over it and you get a break, it's called a break within a bull market. Markets often stop there. I thought the resistance, and all the videos are up there if you want to watch, was here at the 200-day average in gray, the Bollinger Band in black, and the green, the 100. And I thought you'd pull back. Now you've got that pullback. Netflix, embedded reading, all-time highs, the best of the best of the best. Robinhood, it got to the Bollinger Band yesterday and today. It's just one power. This stock, as a brokerage firm, is in a league of its own, the way that it just keeps making this move up. It appeals to that 30-year-old crowd, and they just are traders in and out. They were the meme crowd to begin with. I don't know what you'd call them now. As we look at ExxonMobil, I'm still not friendly on the energies. I see this as a bear market rally because you've been under the 18-day average. We'll see if it can get any legs. I don't see it. Like you saw me talking about Google and so on and other markets here that they're in the beginning. Well, you came down, you fought your battle at the 18-day average. Today you launched over the 200-day average. The Bollinger Band's the next resistance to 1966, but you are overbought. It's your first move over the 200-day average in quite a while. I'd use a little caution here. A lot of these markets are getting themselves up and going. What happens if the jobs report in somehow is a shocker? I don't know what the word shocker means, but what if it is? In the financial sector, I just can't get excited about this market. It's just sort of tied in at the 18-day average, and it went dead. You don't have a trend. You have a higher high, lower low, and it's literally 2 weeks almost of just hanging at that. When we come to the industrial sector, you're overbought, getting a rally. Do you have enough steam to get to the upper Bollinger Band? I have my doubts. It's overbought. I wouldn't be surprised if it pulls back to the 18-day average and does a little bit more of a dance routine. And the energy, all that I see is a market that keeps rallying back to the 18-day average of closes, and every time it gets there, it runs out of steam. Will the market one of these times break out and try to come down into the 80-34 level? It's possible. Remember, this isn't oil itself. These are the refineries, the oil companies, all through there. That's what XLE represents. In the gold market, with the dollar approaching contract lows again, how could you be anything but friendly to gold? From a fundamental point of view. I mean, to me, the lower it goes, that's a benefit. Here's the other thing that keeps happening. We keep hearing the tariffs are inflationary. They would be if the dollar wasn't breaking so much. But the dollar down 10% since February takes a lot of the sting out of prices going up because of tariffs. Got to remember that. Now, here's the negative to what I just said. Come July 9th, instead of these lower tariffs that the president put in, what happens if they go shooting up? That then starts to overcome that break, in my opinion. I can see gold still making a run for the upper band. It is overbought, probably not the place to be, but I think silver could be giving us a story. Is silver saying it's time to catch up with gold and get rid of that silver-gold ratio in the 97 level and get it back to some other number? I don't know. I'm not advocating that you buy a Bollinger Band, but I'm also saying I see something else developing here. And are you developing a bullish embedded reading? Both numbers were over 80 today. Both were over 80 the day before, not the day before. Tomorrow's a crucial day if it develops that, and then maybe it's time for me to do a special report on silver. I'll be watching tomorrow. Copper market, I gave you the story as to what's happened in the Congo with the Ivanhoe-owned mine, and very, very big news. I haven't seen anything that discredits it. Going to be a big loss of metric tons of copper production, and they're pricing that in my opinion. Plus, you have the embedded reading. So breaks in this market, I think, are going to be gobbled up by the pros. In the bond market, a rally today off of the ADP number. Now, one number, as I explained earlier, to me doesn't set a trend. And ADP is one of these numbers that I don't have all the faith in that other people do. It swings around too much. Jobs data on Friday will tell me a better story. In the dollar index, this is what I'm telling you. If you can get through all this, you create some real havoc in the marketplace. The question is, does it have the power to get under and stay under 27.19? It's only 17 cents away from the market or so. So be careful there. Well, what is that? That's 13 cents away from the market. Last, FXE. If the dollar drops, look for the Bollinger Band to be hit. And guess what? You're developed. Past tense, a bullish embedded reading here. So as far as Ira is concerned, who is that Ira guy? Ira is thinking this market looks pretty darn good at this point in time, and I'll be talking about this probably in the morning subscriber video. I hope you join me for those, because that's where the real guts of what I have to say to you comes out. Remember, you can click up here. There's an icon to join me in that research area. You can do it up there. I'm Ira. I'll catch up with you all in the other videos tonight.